Goldman Sachs, global investment titan, the investment firm requires for you to have 10 million investable assets to join them, is projecting a loss of $1.2 billion this year. That number may still grow if a soaring economy forces the firm to take more lending loss provisions. It's easy for us to dismiss news like this. After all, how many of us are actually having $10 million to hand to someone to manage? It shouldn't affect us unless we have money there, right? Besides, there are a lot of fund managers in Goldman Sachs. Their bad decisions may not necessarily reflect the economy or us, right? The answers to these questions aren't simple, but I'll try to lay it down in a much friendlier way. Goldman Sachs is one of the companies that contributed to the economic crash of 2008. That by itself should give you an idea how much they influence the economy. Many of us never shook hands with anyone from Goldman Sachs, but we all suffered because of what they did. Goldman Sachs contributed to the financial crisis by selling subprime mortgage-backed securities. Alternative mortgage products, the bank's mortgage bond division sold $12.9 billion worth of subprime mortgage bonds in 2006. A mortgage-backed securities, or MBS, are bonds backed by real estate loans pooled together. That in itself is not bad. However, Goldman Sachs and other investment banks at the time sold MBS to borrowers who didn't have the capacity to pay their loans. Those are called subprime borrowers. They sold billions and billions of dollars worth of these for years and years. When borrowers couldn't pay anymore, the bonds backed by those loans didn't have a source of fund to pay the lenders. Those are the investors or lenders whose money was used to lend to borrowers. And because they were and are so big and powerful, our country couldn't afford to let them sink. When they needed rescuing, we had to do it. Back in 2016, Goldman Sachs agreed to pay $5 billion in connection to its sale of residential mortgage-backed securities. And that may sound like a lot until you realize the government then had to print trillions of dollars to rescue companies like Goldman Sachs. How is this related to our situation right now? Well, Goldman Sachs didn't do anything illegal then. They took risks, but they didn't do anything illegal. And that's the question we should be asking right now. How much of this $1.2 billion loss, possibly more, they are projecting will be passed on to small investors? Yes, that loss includes a bunch of stocks that would dip, and yes, that will affect us, but what else are they hiding there? What kind of deals are they offering their borrowers and lenders? Obviously, the sheer size of these companies are casting a giant shadow in the investment world. And in that world, it's the smaller investors that are in the bottom of the food chain. It's actually us that's carrying all their weight. I have personally not been able to find anything else that could protect my own investment against the Goldman Sachs of the world other than diversification. Just about any asset I invest in, stocks, bonds, real estate, and others, may get affected by Goldman Sachs. So what do? Well, I diversify with assets that I directly own, like gold and silver. Unlike other assets, gold has no counterparty risk. There is no single company that can short gold and silver. Noble Gold Investments also has the best buyback program. So I know if I ever need to liquidate that gold, I can do so at any time. Gold and silver with other assets give me a well-balanced portfolio. I may have assets that will go down if Goldman Sachs and other institutions take down the market again, but I know that they won't tank everything that I have. From Tesla to JP Morgan, everyone is saying a recession is sure to come. So if you have any more tips on how to invest or simply survive the recession, at least financially, let us know in the comments section down below. This has been Anna Kate with Noble Gold Investments. Make sure to like, subscribe, and ring our bell for all of my latest news and updates.